Hello Stackers, William here, and welcome back to another video. So in today's video, I'm going to be talking about why I think that the Bitcoin bottom could be in, and also why I have been accumulating crypto over the last couple of weeks. So right off the bat, I just want to let you guys know that the beginning of this video is going to be a little bit math intensive, and please don't let that scare you. It's just going to be a few functions that have to do with charts. I think it will help you understand what you're looking at when you graph things on logarithmic charts, and it will help you become a better trader and investor. So as you've noticed here on the screen, I have a chart pulled up, and this is a very interesting chart. I haven't seen it talked about in a lot of places. It's just Bitcoin divided by the core CPI, or the inflation rate. So the first thing to recognize before we even dive into this chart and everything that it has to tell us, we need to look at what core CPI is and the differences between core CPI and headline CPI. So I'm going to go over here to the Fed's website here, and as you can see, there's two different lines in this chart. So in red is the core CPI, and in blue is the headline CPI. So what is the difference? Well, first let's look at how they move in relation to each other. And you might notice right off the bat that the headline CPI in blue is much more volatile than the red line. The red line kind of looks more like a moving average, but overall you can see that there are many periods of time where the core CPI is higher than the headline CPI, even though the headline CPI is more volatile. So right now in 2022, we can see that the headline CPI is actually a lot higher than the core CPI, and the headline CPI, it's called the headline CPI for a reason. It's the one that makes headlines, right? It's the one that people talk about. It's the one that the media covers. So the difference between core CPI and headline CPI is that core CPI doesn't include commodities. So I have a few notes here. I'm just going to read the difference between headline and core CPI. So headline CPI can shift dramatically regardless of economic conditions due to energy prices or food supply. Think cost of living inflation. Factors outside of the economy can affect this inflation reading heavily. Politics can also affect the headline CPI because politics often influence energy prices, oil prices, as well as food prices. And food and energy prices are dependent on rapidly changing human emotions, not slow-moving supply and demand. So that's a little prelude to what core CPI seeks to track. Is it tries to take out the emotional aspect of what the headline CPI captures, and it tries to more accurately capture inflation based solely on supply and demand dynamics. The core CPI gives a more accurate reading on the underlying inflation of an economy. It takes the food and energy volatility and thus the seasonality effect out as well. So seasonality is when you have changes in certain commodity prices just based on the seasons. Things like seasonal weather or large storms or environmental anomalies are factored out. Think true economic health inflation. So whereas the headline CPI, you have cost of living inflation, you can think of core CPI as true economic health inflation. So the Fed's 2% target is based upon core inflation, as well as the personal consumption expenditure, or the PCE. Now, I'm not going to talk about the PCE in this video. So this is widely accepted as the better measure of inflation because it doesn't factor in the trading of commodities such as corn and oil, for example. Okay, so let's jump right into what you guys came for, this Bitcoin chart, this really bullish, in my opinion, bullish Bitcoin chart. This is Bitcoin divided by core CPI. And now you guys are experts on core CPI. You may not know how it's calculated because it's super complicated, but you understand the general concept of core CPI, right? It's a stable measurement of inflation that factors out volatility, human emotion, and external factors. So whenever we look at this chart, you can notice it's following a very specific pattern. Now this is on a logarithmic chart. And so when you have a logarithmic chart, when you have a linear line, it equates to exponential growth. This is a basic math function of logarithms. As you can see here in blue, this is a logarithmic line. A logarithmic linear line like such equates to in green here, a linear exponential increase in price action or in value. So when we go back on this chart and we're on logarithmic charts, you can see that many times, including on charts such as Bitcoin, on the logarithmic chart, we have these linear price action lines that coincide with price, and this just equates to exponential growth. So it's just an easier way to visualize growth that looks like the line in green here. So if we go back to this chart, we can see that we don't necessarily have a straight line. We have something that looks more like the latter portion of a sigmoid. Now you don't have to understand what a sigmoid is, but basically a sigmoid kind of looks like this. and we kind of have this top portion. So we kind of have half of a sigmoid, but that's also just known as a logarithmic line. So if you were to graph a linear line, if you were to take a linear function on a graph, and you were to turn that into a logarithmic graph, you would get something that more or less looks like this, right? If you plot the log of x, you're going to get something that looks kind of like that, what we have here in green. And now you don't have to understand that at all. You can just look at the shape. It's kind of interesting for those of you who enjoy math and those types of functions. So if we look at this chart here, you can see that we have, like I said, we kind of have this logarithmic function on this log scale that looks like this. So what does this mean? Well, whereas Bitcoin by itself, denominated in USD, has exponential growth, this type of growth, when taken in relation to the core CPI, is actually linear growth. Now, even though overall, since inception, Bitcoin has outperformed inflation at a linear rate, we do have periods of exponential growth. So this would be, you can draw straight lines on a logarithmic chart, which would represent exponential growth. And you can see that there's periods of time where we do have exponential growth. So we had exponential growth there. We had extreme exponential growth starting off during Bitcoin's inception against inflation. And then we have a gradual decline in the rate of growth of Bitcoin's function. So if you want to actually maybe draw this out, you can draw a bunch of lines where the slopes get smaller and smaller as you progress. And that would just indicate that Bitcoin is growing at a slower pace against inflation over time. You could average all of those lines together into this logarithmic shape, which is what we have here. So enough of that math stuff. Let's dive into this Bitcoin divided by core CPI and kind of look at what we have. We've already established that it has a declining rate of growth over time. However, this is still a period of time of linear growth against inflation, and that's something that a lot of assets don't have. All right, so now that we kind of talked about that a little bit, let's talk about what this actually means. This is Bitcoin, the price of Bitcoin divided by whatever the CPI is. Okay, so Bitcoin divided by the CPI is equal to whatever is on this y-axis, but we can denominate a few relationships based on this equation. We can say that as Bitcoin's price increases, Y is going to increase. So over time, this has been true. Bitcoin's price has been increasing, right, in terms of CPI. So we've had an increase in the Y value, or an increase in this chart right here. So another thing that we can extrapolate off of this is that as CPI increases, which we know that it has been increasing a lot lately, the Y value, or our chart value, is going to decrease. And we've seen that take place. So now that we know kind of this correlation, which applies to any chart that you're looking at, we can look at this chart and kind of see what's going on. If you were to trade Bitcoin based on its denomination in CPI, it is paid heavily to buy Bitcoin when it's along this green trend line down here, right? Back here, these were the best places to buy Bitcoin, again, during the pandemic crash. And if you look at where we are right now, we are actually below the green line. So in terms of inflation, in terms of the inflation rate, which Bitcoin seemingly and supposedly is a hedge against inflation, this is the most undervalued Bitcoin has been against inflation during Bitcoin's lifetime. So if Bitcoin truly is an inflation hedge, which I believe that it is, this is the most bullish chart that you can possibly look at. Because what do we have? Well, we have Bitcoin denominated by core CPI in the United States. Core CPI, the only reason we have a CPI reading is because the debt system and the fiat monetary system is broken. Bitcoin was created as a hedge against all of that. It's kind of like if you were to pick one chart that represents Bitcoin's whole purpose, crypto's whole purpose and existence as a whole, this would be it. Because CPI is derived from the broken monetary system. And here we have Bitcoin denominated in that very metric. So what I want you to notice is this pattern right here that I've denominated in red. So this pattern is called a bullish falling wedge, and it's all over this chart. If this chart pattern is the MVP of Bitcoin divided by core CPI. So what is a bullish falling wedge? Well, we have this falling wedge pattern, and it looks like this right here. This is a bullish falling wedge right here where my cursor is. we have an increase in price, and then it consolidates to the downside. We have a series of lower lows and lower highs, and then it's a bullish continuation pattern, so it breaks out to the upside. And let me tell you, over and over again, this is what we see. Increase, consolidate, series of lower lows and lower highs, and then before you know it, we have a continuation higher, and then we have the same thing. Continuation higher, same thing. Continuation higher. This is not a falling wedge pattern, this one here, but that would be a symmetrical triangle. If we go in and we can just see this happen over and over again, it's quite interesting. Let's zoom out a little bit more. This one was a really, really long falling wedge pattern. So you can see it again here. We had a price increase, lower lows, lower highs. We had an increase, again, lower lows, lower highs, falling wedge pattern, breakout to the upside, falling wedge pattern, and then the pandemic happened and broke out to the downside. But then look at this, huge overperformance against CPI. Recently, what do we have? Well, we had a breakout to the upside, and now look what's happening. We're kind of consolidating here, making lower lows and lower highs, and we're reaching the pinnacle of this shape, okay? There comes a point in the falling wedge where price action has to do something dramatic. So as you can see here, as we reach the end of this falling wedge, price action did something dramatic, okay? It's the same for the end of this wedge, the end of this wedge, the end of this wedge. What happened after every time we got to the end of these wedges in terms of core CPI? Boom, straight up, boom. We went to the top of this channel, top of this red channel. And it's really interesting how this trend line has been resistance over and over again for Bitcoin on the way down, which is something that we've seen in the past here as well. I mean, you can just continue to go back, all these descending wedge patterns. If Bitcoin is truly an inflation hedge, and if it continues this pattern of overperforming after long periods of downwards price action in these descending wedge patterns, right? This falling wedge pattern, then Bitcoin is going to break out to the upside soon. And that's why I think that this is the most bullish Bitcoin chart that there is in existence right now. And I haven't seen anybody talk about this. So you're getting this information on CryptoStackers and CryptoStackers only. And this is something that I actually shared in the CryptoStackers Discord way back in June of 2022. This is the mastermind chat, right? This is one of the premium chats that we have. If you haven't signed up for CryptoStackers yet, make sure that you go check out the website. The link is in the description below. You can get access to all of these indicators and more, as well as general chat and these different easy band alerts with cryptos such as AVAX and Solana, key cryptocurrencies that we're bullish on here at CryptoStackers. And you can get alerts when they are at good price levels, good buy points. We're nearing a point where it's going to be make it or break it. Bitcoin has to prove itself now or never. If Bitcoin is an inflation hedge, what should we expect to see? Well, we should expect to see this. We should expect to see that. Again, we have these periods of demand where people over and over again come in and they buy Bitcoin. We had one here, and it's gotten longer and longer. These periods of consolidation and buying have gotten longer and longer. It started off as a pretty short period of time, moved on to be a little bit longer, and now we're in this very long period of time where buyers have come in over and over again at a very specific price point. So what is that price point? Let's just go off of this white line, and let's just call that 2250. So if we go down here on this Y, we can say that Y equals 22, man, here goes the writing again, 2250. So at this level of 2250, we've had buyers come in for 5 years now. We had buyers come in here. And then again, this horizontal support line held here after the 2017 bull market, here in 18 and 19, we had this hold multiple times. We can zoom in here and we can see how many times that this support held. This is on a weekly, so multiple weeks. I would say at least 6 or 7 weeks here that this line held. So 3 times here in the past, we've held this critical line on Bitcoin as a store of value at 2250. So let's zoom in here and look at what we have. Well, we're approaching this line very quickly again. And the interesting thing about this chart is that it proves Bitcoin's store of value narrative. So what do I mean by that? What do we want from this chart to prove that Bitcoin is a store of value? We want Y to increase, right? That's the definition of this chart. The way that this chart is calculated, as Bitcoin's price increases against CPI, Y is going to increase, right? This is what we want for Bitcoin's narrative and the crypto narrative as a whole. What do we also know from this correlation? If we're approaching support like this, what would allow us to reach the support more quickly? CPI increasing. How do we reach support? Y has to decrease, or this chart has to decrease in value. So for Y to decrease, CPI increases, making Y smaller because you're dividing Bitcoin by a larger and larger number. Causes this number to become smaller. This is the thing to remember here. The higher the CPI goes, the higher Bitcoin's price can be at support. Well, really think about what that means. That means that Bitcoin's price doesn't even have to move in order for it to be a hedge against inflation, in order for it to find support. So let me demonstrate this with a few numbers. So just going to my tweet here, at current CPI of 6.3, support puts Bitcoin at 14.2K. So if CPI were to remain the same, not go up at all, then Bitcoin would have to be 14,200 approximately in order to be at the support level. But we know that inflation is likely going to rise. Remember how I said at the beginning of the video, even if oil and energy and food come off a little bit, core CPI and everything that's used to calculate it, let's say it goes to 7. Well, if you replace that 6.3 with a 7 and solve for the same equation, you get Bitcoin at a price of 15.8K. Okay, interesting. So we're seeing, again, as CPI increases, Bitcoin at support is increasing. Okay, so let's say CPI goes to 8%. Well, then Bitcoin would be at 18K on that support level. That's a bottom. We've already been at 18K. We dipped into the 17s actually. So let me say that again. If CPI goes to 8%, Bitcoin would be 18K at that support. So let's actually throw on Bitcoin's chart. So Bitcoin's at 19.5 right now. And if CPI is at 8%, then Bitcoin on that support would be around an 8% drop. Let's just round up, say a 10% drop. So that's why I think that the bottom could be in, based on inflation continuing to rise and based on the fact that this support is likely to hold. Let's do another scenario. If core CPI ever gets to 9%, Bitcoin would be above where it is right now to be on this support line. And, I tweeted this, the bottom could very well be in if inflation continues to rise. Otherwise, Bitcoin will have to break a multi-year inflation hedge support level. And this will start the first bear trend against core CPI, which will be negative for the entire space. So it's not all roses in terms of this chart. If we were to break this chart here, it would be the first long-term or longer-term bear trend against inflation that Bitcoin has ever had, which would be negative for the whole space. So let's hope that that doesn't happen. Another scenario would be if inflation starts to come down, then Bitcoin would have to be at a lower price in order for us to reach the support line. I think that it's more likely that we either hold support, or if inflation continues to come down, we'll likely see positive Bitcoin price action anyways. So then that would be the bottom in either case. Now, if you are curious in terms of the other type of inflation, the headline inflation, you can denominate Bitcoin in terms of headline inflation. It's a very similar chart. You still get this logarithmic, log of X function on this graph. You can see that we still have these descending wedges, but this is just a more volatile chart. This is Bitcoin denominated against an inflation type that includes commodities. So you can see in the past that we've dipped below this green line once before, and again, we're below it right now. So we can also look at it in terms of Ethereum's curve. So this is the headline inflation curve for Ethereum, and the headline inflation curve actually fits Ethereum a lot better than the core inflation curve, but this would be the core one. As you can see, we have the same thing happening. We have these descending wedges here, these bullish descending wedges with the same type of price action that you would expect. You have an increase, consolidation before it explodes upwards, more consolidation, explode upwards, more explode upwards, and now we're in this very, very long period where, maybe the longer the consolidation within these wedges, the more dramatic the upside. We can extrapolate a few things off of this. I'm gonna go to the core CPI and we can get an interesting little reading on Ethereum. I'm actually gonna delete its curve because we have a line right here that we found support on multiple times, and we are headed straight for this zone right here. So what would Ethereum be at this zone? Let's draw a line right here and just say that this zone is 107. Okay, so we can take our core CPI, which would be 6.3. Okay, and then this would be Ethereum's price here. We can equate that to 107. So what would Ethereum have to be if inflation was at 6.3? 6.3 times 107, 674. So Ethereum would be at 674 here if core CPI continued to remain where it's at. Now, if core CPI goes up to 8, we would see Ethereum at 856. So Ethereum has potentially more downside than Bitcoin, but more upside as well. For continuity's sake, let's do Ethereum with a 9% CPI reading. So a core CPI of 9%. would put Ethereum at $963. If we were to go to the Ethereum chart here, let's throw on our weekly easy bands and see these easy bands you get with the CryptoStackers lifetime membership. Let's look at where that would put Ethereum. If Ethereum was to drop to the support level that we have noted on the last chart, it would be 856. It would be about a 35% drop. Now, a 35% drop would actually put us back into our buy zone here. It would actually also correlate with this dotted support line right here. So that would actually be a good buy level for Ethereum. So let's take out the easy bands and look at another CryptoStackers Pro indicator, which would be the short margin pressure levels. Let's see if that 856 level has any margin pressure levels associated with it. Let's go here, and we have a 900 level here, which is pretty close to 856. And then we have a 692 level. So this 692 level is actually pretty close to if core CPI remained the same. That's the level that Ethereum would have to drop in order to get to that support region that we had mapped out on the CPI chart. So if we go here, we have a margin pressure level at 894, which would actually be a double bottom in terms of Ethereum. And that would also coincide, depending on how fast it gets there, it would coincide with this support line, which is this trend line that we've been following for the entirety of this bear market. And it would be a retest of that, as well as a double bottom, as well as a 2x short margin pressure level. And go check out Forrest channel if you want an explainer video on how these margin pressure levels work and why they're so accurate. We have three areas of support here, right? We have the downward trend line, the margin pressure level, and the double bottom. So with all those things coming into place, Ethereum would be around $900, $850 to $900. And I would definitely be buying that level heavily, as it would correspond with this green buy zone. The last thing I'll talk about is inflation. So can we expect inflation to stop rising? Like I said before, headline inflation may decrease, but core inflation will likely increase going into 2023. Even if oil and food, especially I'm talking about oil and energy, come down in price and would cause headline CPI to come down, core CPI will likely remain high. That's because core CPI reflects the overall health of the economy, and the health of our economy and the world economy is not healthy at all right now. And in order to effectively bring down core CPI, the federal funds rate and the 10-year yield have to be above what the CPI is. And I've talked about this multiple times before. I've talked about this in earlier videos you can check out. And I've been saying this all year long, that CPI is not going to come down unless the Federal Reserve increases rates or the 10-year yield above CPI. And you can see here, CPI is here in green. The 10-year yield in blue, or the federal funds rate in red, is nowhere near where it needs to be in order to combat inflation. You can see back here in the 80s, in order to drive down this super high CPI number that we had back then, Paul Volcker, the Fed president at the time, the Fed chair, increased rates so much it crashed everything. But look what it did. It drove CPI down in an amazing way, and we had this amazing period of prosperity in our economy. Now, it is painful to get to that point, but it's what happened, and this sparked the longest bond market bull run that we've ever had. And it's a bull run that we actually just broke. If you go to my Twitter, it's actually my pinned tweet. It talks about how the bond market has officially entered its first bear market in 76 years as of today. That huge increase in interest rates and the 10-year yield that Paul Volcker induced in order to combat inflation is what sparked this massive bull run in bond markets, right? So these are bond yields right here. So bond yields decreasing would indicate bond prices increasing, or a massive bull market in bonds. And as you can see, we've had a huge sell-off. Spiking yields would indicate a huge sell-off in bonds right here. So, and this is what's been driving risk assets down. This is what's been, all over the news now. Finally, people are catching on. It's something that I've been talking about, and people in CryptoStackers Discord have been talking about all year long. And if you've watched this channel, you're definitely in the know about these things, and you're not surprised by this at all. But this is why risk assets have been selling off. All right, that's the end of that video. I hope you enjoyed it. I hope you learned something new. I would encourage you to subscribe and follow me on Twitter if you haven't already, and go check out Forrest's channel. He has the main CryptoStackers YouTube channel, and there are hundreds of hours of crypto-related content for you to enjoy and learn on there. Go ahead and hit that like button if you haven't already, and make sure to ask me any questions on either in the comment section below or on Twitter if you want me to answer them. All right, guys, thanks for tuning in. I'll see you next time. Bye.